Hello, guys. Welcome to the podcast here at Electrical Power Source.
Hey, what's the name of our podcast, bro?
Yes, go ahead.
It's
A shocking.
a shocking good time.
A shocking good time. I like that.
We apologize. Yeah, it's barely our the first one.
This is
So
the first one.
it's our first one. So it's gonna be a shocking good time.
It's a great time. Yep.
So we got Joel Rivas in the house today.
Yes, sir.
Thank you guys.
Pleasure having you here, Joel.
Thank you.
Always
Elijah,
a pleasure. Yeah. Also, what we'd like to start off with, telling us a little bit about yourself, how you got started, where you come from, kind of a little bit of background would be great.
Most definitely. Well, my name is Joel Rivas. Hello, all you listeners out there, all our fans.
Yes, sir.
So I am with the bank, Valley View Home Loans. I've been doing mortgage loan consulting for about 7-8 years now, and we are direct lenders, so we will kind of dip into that and see what the differences is. I'm actually a Washington Union alumni here, so
Nice.
coming back to Easton, makes me feel real good.
Awesome.
Always feels good to come back to your community.
Yes, sir.
Yeah. So, how did you get into the home loans? Do you have kind of a drawing? Like, did something draw you towards that, or tell us a little bit of that if you can.
Great question. So leaving high school, went straight to college. Started doing my full-term courses, and then after that, I did get a job at Wells Fargo. Started off as a teller. Then I went to the business side telling, and then I was a little bit intrigued with the home consulting. We had a gentleman there, and he would always be there very limited though. He'd be there one day of the week, and always driving nice cars, always with a smile on his face, like the pursuit of happiness, right?
Yeah.
Guy was always smiling, always having a good time, always playing golf. I was like, man, I want to play golf.
Doing something right.
Right. So he was definitely doing something right. So, eventually the job didn't work out, and we ended up going to, other adventures. I managed a cell phone store for quite a few years. And then after that, my brother-in-law, actually, Mr. Fu Fan is his name. He actually got me into the mortgage lending. So he's a mortgage lender as well too, out of Irvine, California. And again, he was one of those guys that was always smiling too, always happy. I'm like, man, I want to do that,
Yeah.
pursuit of happiness, right? So I'm like, hey, tell me a little bit more about what you do, right? And I've always loved numbers. I've always been the math guy. I always putting numbers together.
Nice.
And I don't know, I just like breaking my head doing those type of things.
Nice.
So, I asked him the question, and he goes, you know what? I'm gonna give you the courses that I took. I'm gonna give you the road path that I took. You let me know if you would like to pursue it, and you have pretty much an opening here with our bank.
Nice.
And I was like, didn't really understand what that meant, right? But
Mm-hmm.
I was just drawn by it, and just did the first step is just do it.
Yeah.
That's with anything. Just don't wait for it. Just do it.
Yeah. Well, I mean, there's a great saying: you can lead a horse to water, you just can't make him drink it. And he led you to it, and you drank. So
I drank the whole
congratulations
thing,
to you for
Thank
taking that and making it what it is now.
Thank you, sir.
You have a question
Yeah, no,
for him?
I had
Elijah?
ask
Don't
a
wanna
couple
interrupt you.
questions on here. What are some of the different type of loans that you kind of deal
Great.
with? And
Great question. So we are direct lenders. So we work with all the government loans. So government loans, for all the people that don't know, they're all FHA, VA, USDA loans. Of course, we have conventional Fannie, Freddie Mae. However, too, we also do have alternative type of documentations. Alternative documentations would be a little bit more creative financing, I would say. So most of the traditional loans do require for you to have a 2-year, income tax. You got to show credit, income, assets. You need to show it all, right? It's not like back in the day you show me a pay stub, you got a house.
I see. Yeah.
That's the traditional way. Now, the traditional way is now you need to show me everything prior to me giving you this home loan, right? So
Yeah.
they need to do diligence, which is, again, protection for the bank and also for the client as well. right?
Warranted.
We don't want the past history of,
Right,
what had happened there, right?
Oh,
So,
crisis.
yes, sir. So ever since, so the traditional loans, again, it's the full documentation. The government loans, a little bit better terms, right? But we also offer alternative documentations for those clients that, on paper, self-employed, let's say, don't qualify, right? And they would go to a bigger bank, and the big bank would say, that's not enough income. You don't qualify. You don't meet our guidelines, which
Right.
is top credit, 2-year clean history, A paperwork type of deal, what they call. So once we dabble into those, again, it opens the doors to help out a lot more people, especially in the community.
what about people that are going to like school? Is there any type of exceptions for those type of people, or like how does that
There
work?
definitely is. So going the federal government, and then so a lot of people don't know is they hear on the internet or they hear from other sources is that you definitely have to have a 2-year history, right? You need to be working at the same location for 2 years. That's actually incorrect. You can actually be, let's say for a college student, you're pursuing to get a career in whatever career you want to be. But if you're doing schooling and it pertains to the job you're going to be doing, we can actually utilize the school history
Nice.
as
Wow.
work history, right?
That is
So
awesome.
helps out a lot of the students. And of course, the news today was the student loans, right, going back active.
Oh yeah.
So for those type of people, definitely sit down with your mortgage lender and then kind of go over those options and how that affects you purchasing a home. But if you are a true first-time home buyer, still a lot of programs out there for you.
Yeah, well, now that you mentioned first-time home buyers, what are the type of programs? I know that there are programs out there designed for first-time home buyer people, that
Yes.
the buyers, I should say. What are some of those programs, and how lucrative are they in the market, and how can they help you, write up a better offer for the home and stuff like that?
Great question. So yes, I'm actually, one of my niches is the first-time home buyer, and especially with these down payment assistance programs, right? For these first-time home buyers, we have multiple. I mean, I'll name quite a few, but the most popular one, probably CalHAFA. There's a GSFA one. We have one called Chenoa. Additionally to it, though, there's also the City of Fresno program that not a lot of people know. They're offering about $100,000 to purchase your first-time home purchase, and that's ridiculous, right? So
Yeah.
they're definitely offering the assistance for these people to jump into the home ownership and complete your dream.
Do you have to be a Fresno resident, or?
Yeah, not have to be a Fresno resident. You do have to purchase in the city of Fresno.
Okay.
So it does have its guidelines to it, but again, nothing out of the ordinary. So it
Oh,
is
right on.
considered more for low to median income. But again, there's options that you go somewhere else with the big banks, and they're like, "What are you talking
Yeah,
about?"
and that's what I've heard. There's a lot of word on the street and about big banks and how they don't take care of you as well as a local lender that's a smaller shop, not smaller in the way, but not as big as a big bank.
Right.
Is it because, and this is just me assuming, maybe, is it because they have such a high volume of customers and people that they don't really care to go down to the personal level? Is that maybe part of that?
I guess that could be definitely a part of it. Because if you think about it, right, you got to go to them. They don't come to you, right?
That's
Type
right.
of deal, right? So as
That's
a
right.
direct lender, I mean, I had to go out there and find my own leads, my own realtors. I have to hustle and motivate, right? With these big banks, they only have their products, right? So they finance the loan with their own funds. They're going to service the loan. So they only have what they have on their products, what they have on their product sheet, right? So if you don't fit that box, guess what? You don't qualify based off of their terms. They're not going to refer you out somewhere else, right? So
Go above and beyond.
there you go, right?
I see.
So with the direct lender, again, the options that we can provide, maybe you don't fit this box, but this box opens up, right? And
I
then
see.
these are the guidelines here. You don't meet this one, but you can meet this one, right? So we can still make it. And my whole thing is always try to tell the client yes, right? I hate the word no. Like
Yeah,
that
yeah,
just
absolutely.
doesn't flow with me, right? So
Yeah.
is go above and beyond for the clientele. Again, for my roots is definitely push harder. Don't say no is not an answer. Find an answer, right?
Exactly.
So
Right.
that's
I listened to a little bit of Dave Ramsey, and he says, if you come with a problem, he calls it a problem of monkey. He's like, if you come, don't leave your monkey on my desk. Take the monkey with you. Come at me with some solutions and take the monkey back with you.
I like that guy. He's all that's stupid.
Yeah, he's better than I deserve.
Kind of another question for you,
Yes,
man.
sir.
What are some of the do's and don'ts that you see, I guess,
Great.
while in escrow and things like that when you're closing on a
Very
house?
great question, man. So let's just say we open up escrow, right? We got all your documentation. We pre-approved this borrower based off of the credit that we ran that date, that income that they reported to us, and then showed us updated documentation to it, and then their bank statements with the funds that they had right then and there. So the biggest three things is credit, income, assets, right? So credit, don't go out there and swiping your credit card left and right? Go and buying furniture before you even get the home.
Ooh, yeah,
right?
yeah.
Get that grill and all that extra stuff that you want to get. Wait, right? Pay your bills on time. Those are the things that are going to definitely help out the situation there, right? Don't co-sign for your brothers for auto because he needs a co-signer. Don't do that. Income part of it, keep your job, keep your boss happy, right? Come to work, put your 40 hours in, whatever your hours is reporting, because we're going to utilize the income based off of what your recent pay stubs came back at, right? So if they're saying 40 hours and then your verification of employment shows 40 hours, we got to make sure that we continue seeing 40 hours, right?
Got you.
So don't take a vacate in the middle of it. Not saying that you can't, right?
Yeah.
But again, there's certain things
Now,
that can
what
shift alone.
What are some of the repercussions if you were to, let's say you're in escrow and you maybe weren't as informed on the front end of it, and you did, increase your credit or your credit usage by swiping a card? Is that a deal breaker? Is there ways to remedy that? And I don't want to get too
Yeah.
deep into
Yeah,
it,
yeah.
but maybe just an overview.
No, it's a great question, but yes, definitely ways to remedy it. The thing is that once, let's just say you had a balance of $100 when we first ran credit, and then you just went on a shopping spree. We go off of the monthly minimum payment that you make on that account. So let's just say that at the time when we ran it, it was only $25. Now it jumped to $200. So that can affect your debt to income ratio, which
Right.
can now not qualify you for this home loan. So of course, the things that you would have to do is either pay that back down to where it was at, or
Okay, or it just affects you negatively.
correct.
I see.
So as long as you have a low debt to income, it doesn't affect you much, then we just proceed on. But
Right on. Well, we will definitely leave your information on the podcast. And if you have any questions, anybody of our listeners, anybody out there that has an interest in buying a home, definitely we'll leave his information on the description below. And we would encourage you guys to reach out to him and ask those questions. He's a resource for the community, and he's local, so I'm sure that he'd be more than happy. And I got you right here, so you can confirm that for me.
I'm here in the dust. So one thing I would say is to definitely don't be afraid to get the consultation going. Just it's free, no charge, zero obligation, right? It's just let's see my paperwork where I stand at the moment. That way, at least we can direct you to the right position, right? So I think there's abundance for a bunch of loan officers, brokers out there.
Yeah,
You know,
absolutely. I agree.
don't be that guy, right?
Yeah.
Where you're like, no, you only can go with me. That's not the
Yeah.
occasion.
Yeah.
So I definitely just want to be a source and help these people find a way to get their home.
Absolutely. I agree. Abundance, you take from abundance, and abundance remains.
There you go.
And I believe that strongly with my heart. And we try to do the best for our community as far as showcasing different businesses, and this is what we want to use this platform for,
Right.
so we can explore different businesses and be able to help the community. Maybe you won't be the right person for someone, but you are the right person for someone else.
Exactly.
And that there's just like I said, I think abundance reigns
Yes.
over everybody.
Do good for everybody. That's it. Just be a good person.
Absolutely. I'm on the same boat with you. I'm there. I would just, I guess, I have a more specific question,
Yes.
more personal question, I guess. Tell us a little bit about, do you have kids? Do you have family?
do.
Are you married? Or
Yes, I do. I got a beautiful wife. She actually attended Washington Union as well, right?
Nice.
So
awesome.
high school sweetheart.
Really?
Yeah.
Man, that's
She's the
awesome.
one. She
That's
stuck with me.
Yeah, my,
Uh,
my wife and I also
Yeah.
we met each other at Washington. We're
Nice,
married
nice.
this year 3 years, so it's
Right. That's
awesome,
awesome.
man.
Congratulations. And so yes, and I also do have a little 12-year-old. She's actually not a little one. She's probably taller than me now. I'm not sure what we're feeding the kid, but
what did they put in the water?
I know, right? She's just towering. She's tall. She loves softball. I'm that mortgage dad that just, she comes first, and then I do mortgages, right?
Yeah,
So, family guy.
Family.
you have them
comes
going to Washington Colony or Washington Union?
I got some nieces and nephews that come here as well too. So
That's cool.
I'll be around still.
Awesome.
Right on. Well, historically, we know that the rates haven't always been in the 4s, 3s,
Right.
2s, 5s, 6s. I was doing some research before you coming on here, and I know in the 90s, late 80s, early 90s, into the late 90s, the interest rates, didn't fall below 10%.
Right.
Right now, we're in the mid 6s, I believe, or 6s,
7s.
6, 7s. So I know that a lot of people maybe think of the COVID times as, man, it's going to get back to 2%. It's going to get back to 3%. And that might not be the reality for another 20, 30 years. We don't really know. So what's the trend that you see, in the future?
It's a great question. It's the $1 million question, right? Everyone asks me, hey, is it the right time to buy now, right?
Yeah.
So depends on your scenario. I always tell the client, right? It really depends. Are you renting? What's your situation at the moment? I tell all my clients, if you can afford the monthly payment that we're showing you at this rate, if you're comfortable with that monthly payment, don't think about what it's going to be 5 years from now, 10 years from now, or what it could have been 5 or 10 years ago.
Right.
don't live in the present. If you can make that monthly payment and still live well off, go for it.
Great advice. Yeah,
Right?
that's
Because
great.
again, if you don't have a home, you're renting, you're paying your renter to go play golf in the Bahamas somewhere, or
That's
whatever
right.
he's doing, right? So always own your own home. And what I tell people too is marry the home, date the interest rate, right? As you can see, the interest rates, like I'm looking at this paper right here. In 1981, the interest rates were at 18.45,
Yeah,
right?
yeah.
And I remember my mom, she bought her house and she had a 12% interest rate.
Yeah.
So I was going back to the data and looking at all the information. I was like, woo, wow,
Wow.
that is amazing, right? Then we went to the COVID time frame where things just dropped 2-3%.
Yeah.
So again, it's just a trend up and down. Historically, still low, right? A lot of people hear all the, again, sources that they're hearing, all the negativity, right? And they're going to sit on the sidelines because they hear it's not a right time to buy. Interest rates are high, inflation, all this craziness, right?
I agree.
Is get out of your own head, right?
Yeah.
Like, look at your situation. You're the only one that could say if you're ready or not ready, right? So if you meet A, B, and C, and you can make it, do it, right?
That's
'Cause-
excellent advice.
Actually, when the interest rates were like at 2 and 3%, I purchased my first home and around that time, and
How
I
come you
think
didn't use me?
yeah. No, but I think the biggest drawback during that time, man, was like the amount of people that were buying
Yes.
that time. So like we put in an offer a couple of times, and man, like there was 30 other offers with us.
That-
And
Yeah.
I mean, the thing for me is like I was young. I mean, I'm still young, still very young. And I mean, I don't have like a whole lot of money, right? So I mean, there was people putting cash offers. in.
Yeah.
I wasn't able to compete with that, you know.
Yeah.
So it was just the matter of fact of finding the right home, finding the right. It just had to, how the stars had to align
Yeah,
at that point,
right,
man.
right.
You know, to find the house. But I mean, yeah, you couldn't beat the interest rates, man. They were
And
extremely
s-
low.
And something to go off of that is with interest rates being so high, again, there's not so many people jumping into the market, right?
Yeah.
So a borrower is going to sit on the sideline. They're going to watch it for a little bit longer, right? They're going to say, okay, now interest rates are starting to trickle back down, right? What's going to happen? They're going to flood the market again,
Yeah,
right? What's going to happen to these homes? It's going to be just like how it was back then.
yeah,
Overbidding for the property, overbidding. So it's just going to drive up the market even higher, right? So what I say, that's why I tell people, get into the home now. You control your destiny. If things do go down with the interest rates, guess what? You already have your home. Maybe you're probably sitting on some equity because year over year, what is it? Almost a 5% increase in real estate.
Yeah. At first, I mean, I bought my home in 2018, and at the time, my $1,500 was, I mean, it was already for mortgage payment.
Right.
It was already like my top end. And now, $1,500, you'd be lucky to even rent for $1,500.
dude.
You know, 1,500, and so you're right on point with that. You know, just go up to where you feel comfortable with your monthly payment, and you're gonna progress in life. You know,
Right.
you're gonna get raises. You're gonna maybe marry, and you're gonna have a joint income. Or if you're already married, you know, you're gonna try to. If you're already trying to look into buying a house, then you're probably going in the right direction.
Right.
To even, you know, to setting yourself up for the future. You're already thinking about the future.
Right.
So I think that you're right. You know, you got to marry the house and
Date that
make
interest
sure
rate.
you're in there. You know, scared money don't make money.
That's right. There you go. That's my brother. My little brother says, man, he's
Yeah.
he's big on that. So it's true. But the whole thing with the current market at the moment, again, we had some news today. Of course, they're watching the Fed, inflation, all that is causing what is the current interest rate at the moment. There is a pretty cool information data that they're showing. It's the Fed Watch. You can kind of show on there what the next step is for the Fed and how they're going to control interest rates. So the word on the message is that September, no increase, which is good news, right?
That's great.
So there was only like a 7% chance. Of course, they check other stuff like unemployment, jobless claims, and all those reports that they do analyze. But again, for September, we look pretty flat, plateau. We do got some good news on the horizon. Again, I wish I had that crystal ball to tell you exactly when, but
Right.
you know, all the gurus we're following and the guys that are in the back office, they're saying 2024 for a lower interest rate. Now, what that number may be, I think for myself personally, I think 5%, 6% would be a comfortable range.
Yeah.
But
Yeah.
again,
Yeah. And then,
I'm not Jerome Powell.
well, yeah. Well, do you know what kind of historically happens during? I know next year is a big year for elections,
Yes,
and
those are all trigger points.
Yeah. So you know, do you kind of have an idea? Well, you kind of give us already an idea as to what you're, you know, kind of listening to and getting feedback from. But historically, I haven't looked into this, so maybe you might know. During elections, does it usually go interest rate the interest rates go down usually, or
You know,
or-
because there's a change in the cabinet. You
Yeah.
know, there's a bunch of changes, so it's definitely a shift, either up or down. I mean, that
some type
we
of,
would have to see,
we can
right?
expect
But yeah, there's a whole. I mean, the whole government is shifting, right? So
Yeah.
it goes red to blue, blue to red, or blue to blue, red to
Yeah.
red. So there's
Another thing we got to keep in mind is I mean, for myself, I know that my dollar is getting devalued by the day.
yes,
You know, my dollar, my spending power is diminishing by the hour.
Right.
You know, so if $1,500 or $2,000 or $2,500, you feel comfortable with that payment, know that it's going to be even less in the
Yeah.
future.
yeah,
You know, because of inflation, all the money we're sending to everywhere,
everywhere but here.
everywhere but here. Yeah, exactly. So our dollar will be worth less. So in essence, our payment will get cheaper
Yeah.
throughout time.
Right.
So that's the way I'm thinking about it, at
Yeah.
least.
I remember my time when I first bought my home, right? And then the mortgage officer, he told me, your monthly payment's gonna be $1,200, and I was scratching my head. I was like, man, I don't know how I'm gonna do $1,200, right? At that time frame,
Yeah.
right? So I thought it was a huge old payment.
Yeah.
And then, you know, year over year, I was looking at my equity on my property just growing and growing and growing. And luckily, I was able to get my secondary home, and it just grows from there. And I look at it now, estimated values are almost triple of what I purchased it for.
Man,
And
that's awesome. That's awesome.
It's just real estate.
Yeah.
It's the biggest investment, I think, personally.
Definitely, it's one of the biggest purchases of your life, if not the biggest, and the one that can make you financially free in the long run.
Very true.
I strongly believe that.
Yeah.
Okay, well, it was a pleasure having you, Joel.
Gentlemen, I hope we could do this again. It's fun.
Yeah,
Thanks for
it
coming
was
on,
too
man.
quick. Time passes
Yeah,
by too
man.
fast when you're having
I
fun.
still had another hour.
Same here. But I know you're gonna take a trip.
Yes, sir.
You before the podcast started. You're gonna go to Vegas, so man, have a fun time out
We're
there.
gonna let it ride on black, guys.
Exactly.
Black.
Oh man, we wish you the best,
Thank
Joel,
you, sir. Thank you.
in your
Likewise.
future endeavors.
Thank you.
And we appreciate you coming and taking time out of your day to come and join us on this talk. And again, for everybody listening, we will leave his information down at the description below. And
This is gonna be on YouTube and also Apple. Is it Apple that we're having? Apple and Spotify. Okay, cool. Yeah. So if you guys want to listen, appreciate
Yeah.
you guys listening to us. I mean, and your guys' support is appreciated.
yeah, he's got a wealth of knowledge to give, and definitely use him as a resource. Anybody living in the Easton area, Fresno, Central Valley, feel free to reach out. I know he's a great guy.
Thank you.
I can tell that just from your demeanor, man. I really appreciate your time, and I wish you the best in everything else.
Thank you, sir.
So-
I appreciate that.
Yeah.
Thank you guys very much for having me.
Thanks for
Honestly,
being
I
on,
was
man.
coming
very
back to the roots, so
Yeah.
feel good.
Awesome.
Yeah, absolutely. Well, guys, thank you for tuning in.
We'll
We'll
see
see
you
you guys
next
next week.
Thank you.